In this next video, we're going to go over the importance of choosing the right time frame when you're trading long term. Now, as you saw on the previous video, we had a time frame where you can go back a few years. That's a little too excessive when you're trading long term. We want reference points, but we don't need to go back a few years to try to predict what's happening in the next couple of months. What you need to do is you need to choose a time frame which allows you to go back anywhere between 3 months to 6 months. Here we have a chart for 3 months from October, and we're currently in December. So if we take from the beginning of the month of October, November, and the middle of December. So we have approximately 2 months, a little over 2 months in this example. Now, because we're familiar with what's happened in the past, we don't need to go back to 6 months. If you're not familiar and you want to get a little more reference points, you can go back and take a look at a chart that will show you the 6 months worth of performance if you would like to get some support or resistance levels, or understand a little more of the story of why the price has moved lower and where it's been for the last 6 months. Let's take a look at a 6-month chart as an example. Here we have a chart that brings us all the way back to July, and we're currently in December. We have a lot more information. Now, if we're current on all the events that have happened and we're familiar with the price movement, we would understand that the price moved lower because of Greece and Italy. Then after they found a short-term solution, the price moved up to 142.50 and the low was 131.45. Now currently, last couple of months, the price has gradually come down all the way to 129.48, breaking the 131.45. So if we're current, we don't need a chart that brings us all the way to 6 months. But you might feel more comfortable viewing all this information, getting a bigger picture. And that's fine. There's nothing wrong with that. You might want to look at something a little smaller and go back 3 months. The important part is feeling comfortable with the information in front of you and being able to interpret this information to make the decisions that we need to place our trades. Now we're currently viewing the lowest level of 129.48 and we're currently at 131.36. Now you can see this information here. It's a little tight, a little cramped, and it's very difficult to see the in-betweens and what's been going on. And I might feel a little more comfortable viewing a chart that gives us 3 months of information, so it's not so compressed. Let's go back to a 3-month chart. Here we have a 3-month chart once again, and you can see the price is 142.50, and we don't have all that noise to the left. This is all we want to focus on. So we have a high level, we have the lowest level, and we have the current price of 131.36. So once again, when we're looking for the right time frame, there's no perfect chart to view. It's just what makes you feel comfortable when you're looking at the information that's in front of you and being able to dissect it in order to make the decisions to place trades in the future. Now, once you've chosen the right time frame where you're comfortable, this is the hard part, trying to figure out the best possible price to either sell or buy a currency long term. Now for this, we're going to bring a chart that gives us a little more information with a closer date. Instead of going back 3 months, we're going to bring a chart that allows us to go back a few weeks. Here we can see the price going back a few weeks instead of a few months. The highest level is 142.50. The lowest level was 129.48. And the current price is 132.00. When you're looking at this information and you have the 9-to-5 job, and that's the reason that you're trading long term, perhaps you don't have the luxury to follow the price movement the way we can. And this is what we're looking to change in 2012. To all of our clients, we're looking to explain why the currency has moved 200-300 pips in one day, give you the explanation by you being able to log on to our website, view the reasons why we think the price will either continue moving higher or lower, long term as well as short term, with explanations on what's happened and what we feel will happen in the future regarding the price and current events that may take place a few weeks from today. Now back to this chart. We can see the price movement and where the lowest level was of 129.48. Now whenever you're selling long term, It's all a matter of getting the best possible price. In this case, we know the story and why the euro has come down. It's all been because of Greece. It's all been because of Italy. It's been because of all the price movement and the headaches the Eurozone has had in the last couple of months. Do we feel that the euro will continue moving lower? Absolutely. We feel that the European Central Bank is not doing enough. We feel that eventually Greece in the new year will ask for more money, which should bring down the value of the euro because we've seen it in the past. There are many reasons of why we feel the euro will come down. But that doesn't mean that the euro is going to continuously drop every single day from 129.48 to 129.00 to 128.50. The price movement doesn't work that way. The currency market doesn't move in one direction. It bounces up and down and gradually moves in the direction, for example, in this case, moving lower. So as a long-term trader, what do we need to do? What do we need to look for? Well, number one, we don't want to sell the euro at the lowest level of 129.48. Just like when we're trading short term, we look for retracements in order to place an order in the direction of the trend. Well, here the long-term trend is down, but we also need a retracement because we don't want to get stuck selling at the lowest price and having the price move to 132.00 where it is today. How big should the retracement be before we enter? This is what's going to separate you as a trader from every other trader in the world. Now there's a few calculations here that we're going to go over. Perhaps we might not finish in this video, but we'll give you the beginning stages of what we need to look for when we're looking to trade long term. Here we have the price of 132.00. Lowest level is 129.48. About 250 pip retracement. Is that a good enough retracement to enter in a sell trade? Absolutely. But can the price move against us? And how do we know that this is the best possible price or the best possible retracement to sell this euro at 132.00? That's the key question. We're never going to know if this is the best possible price. Right now at this current date in December, it is approximately 2 o'clock in the morning. We're going to bring a chart to give you a better example and give us a little more clarity on what we're about to explain to you. Take a look at this next chart. Here we can see, with a little more detail, the price reached 132.00. Now we're about to have a report that can have an impact on the price movement. So what should we do? Let's take a look at the news report. Here you can see the report was the euro German import prices as well as the Italian GDP quarterly, and they were both negative. If the price was negative, this should probably impact the euro as well as the British pound and the Aussie negatively because they trade very similar and there's a correlation amongst the three. That means that if the highest level is 132.00 and a news report comes out negative, this would be a very good place to place a long-term trade. So when you're trading long-term, it's not only about analyzing what's going to happen in the next couple of months, but you also have to be familiar with news reports that can impact the price of currency during the future sessions. The best time to place a long-term trade, we would say it would have to be at the end of the US session, which is 5 p.m. Because in this example, the price might be at 132.00. And let's say that news report came out better than expected. This euro perhaps can go to 133. I don't want to sell it long term. If during this session the news report came out positive and I believe that this euro can go to 132.50, 132.60, I'm going to wait till the end of the European session to perhaps place a long-term trade. Because once the trend is established during that session, it's going to continue at least until the end of that session, which is 7 a.m. New York time. So instead of getting the price of 132, why would I want to place a sell there? I would wait till the end of the session and maybe try to get the price at 132.50 or maybe 133, getting a better price to sell the euro. And if I truly want to be patient, I wouldn't place a sell order at the end of the European session. I would wait and risk a few pips and wait till the US session starts. And if I see that the US session is also starting to establish an uptrend on the euro, then why would I want to get 133? Perhaps I could get 133.80 or 133.50, maybe even 134, the max price of 200 pips in one day by placing a trade at the end of the US session. So you see, placing a long-term trade is not just about the long term, where the price is going to be in the next couple of months. It's about getting the best possible price when you're trading. And separating each session is extremely important. And we're going to continue this in the next video.